Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've obviously got the market still reacting to this presidential election. Donald Trump's surprise victory in the US electoral race seems to have put a significant cat amongst pigeons in the bond markets. There have been a huge sell-off across global bond markets with yields spiking sharply higher. The 10-year in the States is above 2.2. The 2-year in the States is above 1%, and that is significantly sort of steepening the yield curve, and markets are responding to this. The dollar has strengthened significantly on the back of this as well. The dollar trade rated index is up towards 100. It hit 100 today, in fact, and it's up at levels not seen since the beginning of the year. And round about the time, or just after the time at which the Fed first hiked interest rates. Now, certainly, it seems as though a December rate hike for the States is absolutely nailed on now, and markets are expecting the Fed to even hike rates quicker than had been previously anticipated because of this inflation and growth path that Trump seems to be putting the States on. Now, the repositioning in the markets is taking place as we speak, with forex majors breaking through key levels. You're seeing equity markets having a big run higher, although interestingly enough today, I'll go into it in a bit, but equity markets are slightly back or starting to sort of stumble a little bit, but really key moves. Now, this repositioning is going to continue to take place, I think, this week. Now, the election of Trump also drags up serious questions over the impact of what is going to happen to the Brexit argument. Will the UK be able to generate a trade deal with the US quicker? Will that give it better leverage for the European Union? And also, what does this whole populist election sort of phase that we're going through mean for the Eurozone? Does it mean that the Dutch, the French and also the Germans are going to be under pressure from the populist parties and the populist vote in that in the elections coming up next year? What does that actually mean for the Eurozone itself? Will it generate a lot of volatility in the euro going forward because of the possible anticipation of maybe even the Eurozone breaking up? So it's lots going on, lots to react to in these markets, lots of volatility and things that traders can take advantage of. Certainly now, moving into the forex markets, we've seen the euro, which has plummeted through key supports left, right and centre. We've got 108.50 broke, 108 big figure broke. It's now looking to test the key January low of 107.10. Now that is a key level because that sort of protects the 105.38 support, but certainly these levels are under pressure and rallies are being sold into on the euro. Now, for sterling, it's actually been outperforming other currency markets as well, which is interesting because, as I said, again, it does Trump's presidency mean that the UK is going to get a better trade deal, a sooner trade deal with the US. It is possible. So the pound has been performing better, although today it's a little bit lower, but still breaking out above 123.30. Holding that break is important. For the dollar yen, the safe haven trades are out of favour now, so dollar yen is soaring higher through the 107.47 key resistance, and that constitutes a long-term breakout and a big base pattern. So interesting move there. So what about the equity markets? Well, we're seeing equities which had been rallying hard on the back of Trump, or certainly the aftermath of the Trump electoral victory. But it's beginning on Monday morning to show a few signs of maybe a bit of tiredness. The S&P 500 has been sort of stalling the last couple of days. The DAX is up towards the range highs, failing at 10,800, and the FTSE 100, again, the underperformer. Sterling strength, oil weakness, both negative for FTSE 100, and the key supports 66.12 to 66.76 are important there on FTSE. Now, in terms of your commodity markets, well, you're looking out for the under pressure gold market to continue. Really, the gold price broke below 1241 on Friday, closed below that level. That's a big breakdown. That opens 1200 big figure, and rallies continue to be sold into. There's a nice selling zone between 1241 1265 now, I believe, on gold. Silver is a similar story, although playing catch up a little bit. You could argue maybe there is a little bit of downside still to be seen in silver, not having quite broken down its equivalent support, but gold broke down below 1241 on Friday. The oil price remains under pressure. Strong dollar not helping. Also sort of concerns about supply issues as well, and the oil price continues to fall away. Key support's broken there, and again that's not helping till on the short side. What will that do for market sentiment generally going forward? So lots going on this week still, despite the fact that markets continue to respond to Donald Trump. We've got the inflation data for the States and retail sales this week. Those are two big numbers. As I said, the Fed is sort of almost nailed on to be sort of hiking interest rates in the December meeting. But we've also got inflation for the UK. Wages growth for the UK will be important with inflation as well, and also retail sales. A bit of German ZEW, which could impact on the euro, and lots, as I said, lots going on for the markets this week. So I wish you good luck in your trading today and throughout this week, and I will speak to you next time.